Brexit has brought about one of the most uncertain periods in corporate and market history in the UK, and the delay now penciled in postpones any hope of any certainty. Specialist AIM portfolio manager Chris Boxall joins us now from Fundamental Asset Management. What a period it's been. I mean, we've spoken several times since the referendum back in 2016. Here we are now with what seems like initially to be a small delay, but it just keeps on this uncertainty. How are you feeling as a portfolio manager? Well,
like everybody else, we're sick and tired of it, and it's the uncertainty. And I think it's highlighted really in the lackluster showing from AIM itself, from the market, in terms of attracting new companies. We've only had one proper legitimate IPO this year so far.
Why is that? I mean, yes, Brexit, but nonetheless companies presumably do want to list.
They do. I think there's a concern and lack of appetite for supporting them, and quite frankly as well, I think we've had the wrong sort of businesses listing from my perspective, and we actually had a meeting with the LSE about the AIM, or the LSE about this, because we're really disappointed in the lack of newcomers coming to AIM.
And what do they say?
They mentioned, well, it's Brexit. Well, Brexit is one of the reasons for the delays. Not only that, you've had crowd funders supporting the earlier stage businesses, and then probably private equity taking them out before they even reach AIM. But what's been frustrating for us is the nature of the newcomers that came onto AIM. Mostly, you know, benefits from old money, shareholders selling down, or debt being paid off. We want new businesses coming onto AIM, raising growth capital. That's what investors want. That's what the world wants.
We have had one recently, Diaceutics.
Yeah, and good on Diaceutics. They came onto the market. They raised 17 million of new money, and
it's only a matter of days ago, which is why the chart looks like what it is.
Short period, but
it launched at what, 76, and here we are now at 102.
Yeah, it's great. It's rewarded. Good luck to them.
What do they do?
I haven't done a huge amount of work on them. They're a data and analytics business, implementation services company. Clearly very popular, good float, well supported. We need more like this. Nice size. What's the market cap? It's about 70 odd million now, about 50 odd on float. Perfect market cap, I would say, for the junior market, circa 50 million. Great stuff. More needed, please.
What sort of companies are finding they're going tough?
Well, we've sort of trawled through, and leading on from the AIM story is clearly the brokers. All the small cap brokers supporting AIM companies are clearly having a very, very tough time, and we wonder how much longer some of them are going to be able to survive. One of note, WH Ireland Group has had to raise new money, another £5 million, and you can see from its share price it's had a torrid time. And there are many others out there like it. I mean, they need these businesses are very much feast and famine. The market's good. There are loads of floats, loads of secondaries, loads of appetite for fundraisings. They do very, very well. But unfortunately, they've little to shore themselves up when times are bad.
So you wouldn't be buying even at these low levels?
Look, in our AIM-IHT mandate, there is an ambiguity of us anyway acquiring brokers per se, because of the qualification rules for inheritance tax planning purposes, and we generally steer clear of them. I also am not that keen on them in public markets. For the reasons I've explained. It's the stability and long-term nature of their revenue stream. Winners, and then you fall off a cliff like that. One
of the big things about Brexit is the fact that many of those that are wanting to see us outside the European Union say that the UK or the British corporate world is very good at being flexible. What's a good example of a company that's been flexible and taking action in this rather difficult market?
It's a good one, because one of the oldest businesses on AIM is actually, and a business that is not generally an acquirer of businesses, and I thought that was an interesting example, called James Latham. It's a timber distributor, based not far from our offices. They actually made an acquisition in Ireland of a leading Irish timber merchant and a distributor of their Accoya product, which is an imitation timber which is having great increasing use in landscaping and various other applications. But this is the first acquisition that Latham's made since 2011, I think, by my reckoning, and in Ireland. And I think it's no accident that they bought this Irish business. There were clearly Brexit. I think there were Brexit-related circumstances around it, and for Latham's business of its maturity to be active like that highlights the issues, I think.
And of course, for some companies, then of course will have difficulties because they're not able to respond because of third-party contracts failing and so forth. What about other companies that you're looking at?
Well, Fulcrum has cited Fulcrum Utility Services, whose share price has been very weak lately, has cited Brexit-related delays for contract delays in a business that it's acquired called Dunamis, an installer of power and grid connections. And unlike Fulcrum's core business, its Dunamis activities are lumpier contracts which require a degree of certainty surrounding them. And when the world is uncertain, people are evidently reluctant to commit to long-term contracts. They need to know the likely outcome, or have some kind of idea what it's going to be like over the next few years. And these Brexit-related delays are not at all helpful in this regard. So it's a prime case. And but look at Fulcrum's share price; it's fallen off a cliff. There are other issues around that as well that we've mentioned around management exercising options, which hasn't helped its credibility. But it's the Dunamis bit, I think, that has been a drag on their performance.
Yeah. Okay, let's talk about a stock that I know that you've got on your horizon as a company that's finding it difficult, about the supply chain issues, which of course have been highlighted as a big issue about Brexit.
Yeah.
This company, Ready, what are you talking about there, particularly with the supply and worries?
Well, it's a vehicle repair, crash management business, and legal services as well, all around the repair of motor vehicles involved in accidents. And Redder, I mean, the share price has fallen off a cliff because of a contract issue that they've had. However, they cited in their results that they were experiencing delay in receiving receipt of parts, car parts. Cars are much more complicated to repair now, specifically because of the sensors in the rear and front bumpers. And these take longer to repair, they're more expensive, you need more components. Component delays coming in from obviously largely Europe as well and elsewhere. But you can see this could be a real glimpse of what we can be anticipating more of, because the motor industry runs on just in time. Yeah. And if you have a bad winter like we had a year or so ago, more and more repairs, more and more delays, it's not going to be exactly helped through Brexit, where we don't know, what's going to be charged for the goods coming in. So again, this is a business that has pointed out given us a glimpse of the future, perhaps. One
of the things we've been focusing in on with the markets at the moment is the opportunities that are available and the foreign exchange movement. We've seen sterling, I think, this highest level of volatility, weekly implied volatility, in over 2 years, almost since the referendum. What about those that are in the FX markets that we should be watching out for?
I think FX has provided a great opportunity and a great risk. In normal circumstances, a weak currency should be highly beneficial to UK exporters. However, when you don't know what the tariff situation is going to be, there are numerous hurdles in the way. But notwithstanding that, FX itself, the FX world has exploded, I think, over the last few years. And we've got one example here of a group, Fair FX Group, that provides currency cards and foreign exchange services to consumers and corporates as well, to a certain degree, and it's been very, very popular. And it's one of many. We have heard of a lot of these private companies called Revolut. There's Monzo, a business called WeSwap, which actually tried to float a few months ago, which couldn't. I think the price probably looked a bit rich as well, but again, the environment wasn't very supportive. But this whole area that was controlled by the banks is suddenly exploded. You've got all these smaller companies now trying to steal this very lucrative business. And Fair FX results got dragged into the currency sort of woes of sterling, because people weren't travelling as much, and therefore its business declined over the last summer. It is a general beneficiary of the very active FX area. However, it's got some short-term blips there.
Alpha FX is another one you're following for different reasons.
Alpha FX we like a lot, and this is a founder-managed business that hasn't been on the stock market very long, and it provides currency hedging services to corporates and also institutional fund managers now. And it has really, it is absolutely flying, growing very, very quickly. It announced the results recently, and it's now opening offices in Canada as well, expanding its team. And you can imagine if you're a UK corporate exporting big foreign currency exposure, you've got this heightened volatility, you'll probably be happy to offload the management of that exposure to somewhere else, like an Alpha FX. So they seem to me extremely well placed to do very, very nicely. We like the fact that the managers there, the founders there driving things, all the staff are buying into this as well, optioned in. So it's really it could be a very interesting story. What's the market cap now? About 250 odd million. Could be interesting going forward, that one.
One final one. I want to cover the area which you highlight as an area of interest is European buyers of UK stocks. AIM has traditionally been an international market, hasn't it, where we've got a lot of foreign interest in this market. What about a good example of a company that is benefiting from this? Well,
with our currency on the floor, I think UK's up for sale. If I was an overseas buyer, I'd be rubbing my hands, quite frankly, because there are some cracking little businesses that are trading at, some of them at distressed levels, not just on AIM, small caps generally. And we thought it was very interesting. One of the stocks that we hold, it's only a small company, we haven't got a massive position, called Property Franchise Group. It's a franchise lettings business. And there was a bit of an overhang, a sort of 10% overhang in the stock, owned by the founders of a business they bought called UMove, which is a hybrid estate agency, which is hidden in this Property Franchise Group. Well, this 10% stake was picked up by Bavaria Industries Group, a German-listed fund. A highly unusual purchase for them. Normally they seem to buy outright industrial groups, and they've snapped off high yielding, I think you get a 6% yield off property franchise business, just like that. Nice, could be a buying opportunity. Where if the Germans are interested, I suspect others should be as well.
Yeah. Okay, look, Chris, it's a good one to end on. Thanks indeed for joining us with this quick tour around some of the stocks to watch and some perhaps maybe to avoid in this period of uncertainty around Brexit. That was Chris Boxall from Fundamental Asset Management.